Hi everybody, Mark Okerbajo here from businesscreditblogger.com. Today's blog post, we're going to talk about a new business credit line and what are the 5 credit report issues that may trigger you to get declined for funding. Now, if you're looking to, at the end of this video, the key thing you're going to learn here is 5 issues that may not be so obvious that may trigger you to get declined for funding with one of our business credit line programs. Now, obviously, there's people who have 700 plus credit scores, but they can get rejected for business credit lines. Why is that? Well, in this video, at the end of the video, you're going to kind of get to understand underwriters' perspective, what underwriters look out for, what they may see as a trigger to get declined for funding, and that's why you may not get projected funding when you go through pre-qual. Just so you know, with our funding programs, you submit a tri-merge credit report to us. We don't pull a hard inquiry, and this allows us, our underwriters, to do a review on your credit with no hard inquiry, and in 24 to 48 hours you're able to know how much credit limits or credit lines and what types of funding you qualify for at that point. But what are the 5 issues that happen on a regular basis, and that's what I'm going to share with you in this video. The first one is excessive inquiries. If you're really looking to get funding and you want to get the maximum amount of funding through a funding program like ours, it's key that you're not out there shopping around for credit, having people pull your credit or applying for credit, because every time you're receiving those inquiries on your credit report, that lessens your opportunity for us to provide funding to you, because our banks, the lenders, the 400 banks and lenders and private investors we have in our network, they look at excessive inquiries as a risky type behavior. So you don't want to have those excessive inquiries. And that could be you having 4 or 5 inquiries in the past 30 days or 60 days. So don't inquire for credit if you're looking for funding, going through a funding program. The second thing that happens is too many recently opened accounts. What happens many times is business owners go out there, they may test the waters a little bit, they may see if they could try to get some loans or a line of credit or a business credit card in the company's name, where they realize the card that they applied for wasn't a high enough credit limit, or it reports to the personal credit, so they're looking for our type of funding program, our type of credit lines, and what happens is too late. They've already opened, let's say, 2 or 3 new accounts, they have 4 or 5 inquiries. By then we can't really help them, because the banks and lenders will see that is too much activity. So that can trigger you to get rejected for funding. And what underwriters code that as is a C3 rating. That means rejected funding. We can't give you any type of funding at this time. So that's another problem. You don't want to be out there opening up new accounts and then expect to get pre-qualified for business funding. The other issue that we see happen quite a bit is a business owner may submit their tri-merge credit report. We give them a projection of funding, let's say $75,000 in credit lines, and they're ready to move forward, but then they go out there and try to get a car loan or try to apply for other type of funding while they're going through our funding program. By then, that causes another issue, and that causes them not to be able to get funding through us, because they're out there trying to do multiple fundings while they're going through a funding program. So don't do that. The next thing is, next issue is a credit report file is too thin. This unfortunately happens quite a bit when someone may have a 720 credit score. And keep in mind, credit scores are a benchmark. That doesn't mean you're going to get pre-qualified for business lines of credit just because you have a 720. There's other factors that underwriters look into. The credit scores are just a benchmark. You've heard me talk about it time and time again. To get business lines of credit, you have to have at least a 680 credit score in all 3 bureaus. But many times there could be individuals with 700 or higher credit scores and still get rejected for business credit card funding. Why is that? It's because the credit file is too thin. There's not enough credit. So they may have a couple authorized user accounts. They may have a recent credit card they opened 30 days ago. There's just not a lot of history. So, and what I want you to understand is, a business owner, if you're really looking to get business lines of credit, but your file is too thin, more than likely you're going to qualify for personal lines of credit or bank lines of credit or personal credit cards or personal loans. So this may give you the capital that you need to grow your business while building some depth on your personal credit. So eventually in 6 to 12 months, you do qualify for business credit line. So that does happen sometimes too. So what I want to emphasize for you, if you do pre-qualify and you're rejected for business lines of credit, but you qualify for other funding like bank lines of credit, or a personal loan for that you can use for the business. Keep in mind those are the stepping stones to get you to build up your credit file. So we do offer personal lines of credit and personal funding programs as well. So that's what I call stage one. The other thing that we see prevalent happening in files getting rejected is because of overuse of authorized user accounts. Now, the authorized user account strategy is a powerful way to boost your credit score. You're basically having someone add you as an authorized user on their credit card account, and you're basically inheriting all that credit history, that payment history, the size of the credit limit on your personal credit report. So it's a great strategy. The problem is it can hurt you rather than help you if it's not done properly. What do I mean by that? Many times when we do a review, our underwriters see that there may be 4 or 5 authorized user accounts on an individual's credit. Let's say they have a 725 credit score. The authorized user accounts are $10,000, $5,000 credit limits with years of history, but the only primary account that the individual has is, let's say, a $2,000 credit card limit that's been open for 6 months. Okay, so underwriters see that. They know the purpose of authorized user accounts. What they look for, though, is the primary account holder. They want to look at the primary accounts. So what you don't want to do is you don't want the authorized user accounts on your credit report to overpower your primary accounts. You want it to balance out. Okay, so that's something you want to be concerned on, or want to be careful of when it comes to qualifying for business lines of credit, business credit card program, etc. Is overutilizing authorized user accounts. So these are just some of the key credit report issues that we see happen. And I'm hoping this is going to educate you to be a little careful and make sure that you don't go out there and get a lot of inquiries prior to submitting a pre-qual for funding with us. The second thing is don't open up a lot of recently new account expecting to get a whole bunch of funding when you're opening up new accounts yourself. The third thing is overutilization, credit card utilization. That's actually the final thing I want to talk about is having too much debt on personal credit cards. That's the 5th issue that we see. Is if you're overextended. Let's say you have some personal credit cards, you submit a pre-qual to us, but you owe 75% utilization. Let's say you're almost maxed out on your credit cards currently. More than likely, the underwriter is going to require you to do some pay downs to qualify for funding. So we call that a C2 rating with required pay downs in order to get funding. So you may get a projection. Let's say our underwriter is projecting $50,000 in funding for you, but you have to pay down card number 1 and 2 down to 50% utilization because they're at 80%. That is something that may happen if you have too much credit card debt currently. But my suggestion to you is don't do any pay downs yet. Submit your tri-merge report to us. Go to businessfundingengine.procredit.com to get your tri-merge report. It costs $1. Let us do the review. It doesn't cost you anything. And we'll let you know which types of funding you qualify for. If you're required to do pay downs, we'll let you know and how much funding you can get if you do those pay downs. We actually even have a pay down program, a way for your credit cards to get paid down if required in order for you to get funding. So that's a new program we just came out with, which is really exciting. These 5 credit report issues are very important. I just want to keep in mind that if you're looking for funding as a business owner, be sure to check out businesscreditbuilders.org. That'll outline our different types of funding programs. And with that, if you have any questions, what I encourage you to do if you like this information, click the like button and click the subscribe button because we're always putting out videos like this, content about funding, in order for you as a business owner to maximize your funding potential. So make it a great day, and we'll talk to you real soon.